Hello trader, welcome back to my news video. Today's video I'm going to talk about the tools and patterns I use in order to mark up my charts every week or every day in a daily basis. So as you can see on the screen, I have grouped them in three categories. The first categories will be the key zone. So this is the list and you can see there are a bunch of tools I use to draw my key zones. The second category will be the market structure, and this is the list of tools I use to market my market structure. And then we have the third category, which is the patterns. This is the list of patterns I use. So ascending, descending wedge, head and shoulder, and so on and so forth. So we are going to go in details, not in big details, but I'm gonna show you. So you can see in the left, I already prepared some screenshot to just to illustrate the tools I use. Okay, so let's start with key zone. So to draw my key zone, I have a list, a lot of tools I use. I use support and resistance, supply and demand, order blocks, imbalance, premium and discount zone. POC is the point of control from the tools already available in TradingView, which is called fixed range volume profile. I will show you that in a minute. And then also use zone open price candle as a zone. Yes, the open price candle. Most of the times it will be the weekly open, the monthly open, sometimes the 3 monthly open, and the yearly open. These are the zone which I use to take a trade from or to take a profit. So we are going to see it in the maybe in the next video we will enter in details this part. Okay, so let's begin with support and resistance. The way I draw my support and resistance is simple. I like to use the a line. As you can see, it is, if I don't mistake, it is the horizontal ray. I like to use horizontal ray to draw. Let me show you. So support and resistance level. So for me, the way I draw my support and resistance, I like to draw it only on higher time frame, such as the daily, the weekly, the monthly, and the time frame above. Okay, same thing for resistance. So for example, you can see in my predefined tools, because I already predefined my tools, I have super resistance level for the daily and the weekly, which is this thick line, not a thick line, a thin line. I can use it for the daily and the weekly time frame. I have another, not another, but I draw a little different than the super resistance on daily and weekly. I like to use the super resistance on monthly and plus. It means all the time frame above the monthly. I like to use a thicker line than the previous one, which is in daily and weekly. So the way I draw my line is simple. I like to identify the top of the wick with a strong move, a strong candle. If we are, for example, for instance, on this instance, we are in an uptrend. I like to identify a strong candle breaking the top, the top of the wick, leaving behind some gaps or some imbalance. This is the way I drew my support. Why I call it support is simple. When price break this the top of this week with an energy candle, I just wait the price to come back to this zone and expect it to bounce. So for me, I'm going to identify in a lower time frame a signal that allow me to buy this instrument. All right. The same thing is for resistance. I like to identify a, a strong candle breaking a low of the week, leaving behind an imbalance. So you can see we have imbalance there, a strong and energetic candle breaking a low. I draw my line like that. You can see this white line. It is my line, my resistance, and I expect when price break this low, this week low, this low, the low of the week. I'm talking about the low of the week. There for support, we have the top of the week breaking to the upside. For resistance is the opposite. We have the price breaking the low of the week with a strong move. I expect price to come back to this line and act as a resistance. You can see in this instance, price react two times. Price react twice. So for me as a trader, I want to get in this trade. I want to identify a signal in a lower time frame to short this market. That's that's how I will use my resistance and support zone. So the next one is the demand zone and supply zone. Yes, supply and demand zone. It's pretty much simple. So supply and demand zone. Demand is a zone where we simply have these patterns. Imagine we have a price dropping like that, some consolidation, which is the base, and we have a strong move to the upside, leaving behind a gap or an imbalance. For supply and demand, I'm going to wait a return of the price to the base. So we have a base, a rally, and a return on this base. This is where I'm going to take a trade. Usually I'm gonna take a trade here. Okay, so this rectangle, this blue rectangle, this zone in blue represent my demand zone. The supply zone is the opposite. You can see strong move breaking low. Imagine, for example, the same situation. For example, we have price action like that in the uptrend. Then we have a break of structure, leaving behind some gap or imbalance. You can see this is an energetic move. We can push the price to the downside. I just wait the return of price in this supply zone to take my trade. Okay, of course you can. I usually look in lower time frame to take a good entry. Okay, so this is it for demand zone and supply zone. So to resume, for demand and supply zone, there are zones where you will find big orders. Generally, we have big orders placed in by big institutions like banks, hedge fund, institution with big money. Usually, they they move the price with a big candles. You can see it on the chart. You can easily identify them in the chart by looking by this strong move of price. Is a big bullish candle for the main zone, and a big bearish candle breaking structure aggressively for a supply zone. And for both, I usually wait the return of the price on the base to take my entry. Okay, so the next key zone I like to use is other blocks. So other blocks is for me is just the same as supply and demand zone, but with some precision. What do I mean by that? I mean, because they allow you to pinpoint the real volume inside the supply and demand. They will help you to have some precision in your entry. That's what I think. I'm gonna give you some example. So let's go to the chart. This is the DXY. For example, let's go to the monthly. Yeah, it's the same example I use. So you can see we have a strong movement. Let me draw it. This is a demand zone because we have a accumulation, a consolidation, a base, and a strong move to the upside, leaving behind a gap. That means there are a lot of orders, a lot of demand. Big institution input some big money in this zone. We simply wait the price came to this zone to take a trade. We just wait the return of the price to the demand zone, stop loss below, and we could have a trade like this. Okay. For other blocks, I mean other blocks is more precision. I like to use the line chart to spot other blocks. This is the two possibility. You can see this volume. This is the volume of the other block. I'm gonna make it a different color. Let me change it. I'm gonna make it no, it's not that. I'm gonna make it yellow to make it easy for you. So go back to the chart, the candlestick line chart. So you can see for the man, I like to take the big zone with consolidation. This is the consolidation before the big move to the upside. But for other blocks, other blocks came is the same as the supply and demand, but it came with more precision, more a pinpoint to the volume because the volume you can see it can be the body. It can be the body of the candles, the sell move before the buy move, or you can use just the volume of the line chart. Okay, this is a simple way to pinpoint to spot the other blocks, and you can see the other blocks why they are they have more precision than the supply and demand because they offer the biggest risk reward. So the next key zone I like to use is imbalance. Imbalance is a zone with a lack of balance. Simply a zone with lack of balance between buyer and sellers. In other terms, I mean there is some disparity between buyers and sellers. For example, in a bullish imbalance, this example, we are in a bullish trend. Buyers tend to dominate in a bullish imbalance. Okay, this is the opposite in the in a bearish imbalance. In bearish imbalance, price tend to sellers, excuse me, in a bearish imbalance, seller tends to dominate But in this case, for example, sell sellers didn't win the game, the fight, if I could say that like that. So in a bearish trend, when we have imbalance, sellers tend to dominate the buyers, and in an uptrend, when price return in this zone, buyers tend to dominate. But there is some time imbalance is not holding. Yeah, when imbalance in a bearish trend, we expect, normally we expect sellers to dominate, but when is not the case, we could say imbalance is not holding, and then buyers take the advantage. In this case, I like to use the reversal of price. So we have a bearish trend leaving a bearish imbalance, and then we can see price break the imbalance, holding above this bearish imbalance and shoot up. So we can say imbalance in this case is not holding, so we expect price to reverse in this case. So to resume imbalance, I like imbalance because they is a gap which tends to be rebalanced most of the time by the price. So the price tend most of the time to retrace on this zone in order to fill the or rebalance the remains order left on the zone. Okay, so the next tools is pretty much the Fibonacci. I like to use the Fibonacci zone. The Fibonacci zone is, I like to buy in discount zone and sell in premium zone. It's pretty simple. When you are, for example, in uptrend, you have this higher high, higher low, higher high. You can use your Fibonacci retracement. We take the low to the high, so you can see this, the zone below the 50% will be the discount zone. We want most of the time buy in this discount zone because the price is cheap. We need to buy low. The same thing in a downtrend, we put our Fibonacci to the from the high to the low, and we want to take a trade above the 50%. It may in other times in the premium zone because we want to sell in a premium price. Simple as that. So to resume, Fibonacci retracement is tools I used in the past, in the very beginning of my journey in trading. Is a well-known tools by traders, by beginner traders, also experienced traders. So when you are in a bearish market, you need to follow the trend by selling in a premium price to get a good risk reward. And when you are in a bullish trend, you need to take a trade in a discount zone. Simple as that. Okay. What else? So Fibonacci helps me to just to measure where is my premium and my discount price. Simple as that. To be honest, with already experience I got, I stopped using Fibonacci because I already trained my eyes to spot those premium and discount zone. So when I open a chart, I don't even need to use Fibonacci. I can spot this premium and discount zone with my eyes. This came with experience in the market, I believe. So the next tools I like to use is the POC, the point of control from the fixed range volume profile. These the tools available in TradingView. You can use it. So in these tools, I like to use specifically the point of control zone. Let me take my brush, which is this yellow line, for example. I like to spot a range. You can see because I didn't put the time, but I usually like to use the point of control from from the last week or the last month because I am a swing trader, so I like to use the POC from the last week or the last month. I I rarely use the POC from the last day because, like I said, I am a swing trader. I'm not a day trader, so this works better for me to use the weekly, the last week POC or the monthly, the last month POC. Simple as that. So, oops, excuse me. So we touch on the Fibonacci, the POC. What's next? So we have, let me delete that line. We talk about POC, yes, the open price candle. So I like to use the open price candle for the the weekly open, the monthly and 3 monthly, and the yearly open. Below that, I don't really use because I for my strategy these zone are the strong one and effective for my strategy. Of course, I can show you. Um, I mean, is an indicator I use. The tools came as an indicator. Excuse me. You can see, double click on that. You can see the parameters. I like to use, as I said, I like to use the weekly open, the monthly, sometimes the 3 monthly, and and the yearly open. For me, this zone are the strong one, and I can also use it for take profit or a support and resistance zone. Okay, for example, in this, let me go to the daily. Let me show you. Yeah, for example, we have this structure, this kind of structure. You can see price drop, breaking the previous low. I can expect, for example, it's not an advice or whatever it is, but just just an example how I use the weekly and monthly open. I expect, for example, price to come back to this zone and then try to short it, take a short. So if I have, for example, I can identify my monthly open. This this if this monthly open overlapping with zone I already mark up, like for example supply zone. This is give me confidence to sell the market. So this is the way I use these indicators. Okay, so let's go back. The second category is the tools I use for market structure. Okay, I I have some diagram here. So talk about trend line. I like to use shift structure or the flow in daily and weekly, and a realistic target. Okay. So for trend line, so many people have, I can see in the internet with through I can see in the internet through many video, a lot of people have a own way to draw a trend line. For me, I have a proper way to draw my trend line. I like to have a trend line with two touch points minimum and a break of structure. You can see, and a break of structure for me to be able to draw this proper trend line. If the condition is not reunite, I will not draw this trend line. I will not consider as a proper trend line. This is the case on this second example. We have two touch points, but we don't have the break of the structure. For me, I don't like to use this kind of trend line. For me, it's not a proper trend line. So this is the way I drew my trend line. I need to see a break from the second origin, the second touch. I need to see from the second. I need to see the impulse from the second touch breaking structure to the upside. If it's not the case, I will not consider this. I will not even draw it as a proper trend line. Okay. The next tools I like to use is shift of structure. So shift of structure is just like a signal entry. Is well, yes. It is a signal entry for me. I like to use it when I want to confirm an entry, usually happening in a zone. It can be any zone we mention in the beginning. It can be supply or a bounce on a support or a resistance. It can be in it can happening inside an imbalance. If we have this kind of shift of structure in lower time frame, this usually is my signal to get in the trade. The order flow daily and weekly. I like to use the order flow daily and weekly. This way because it helped me to define my bias. Can be my bias of the week or my bias of the day. So this line will be my I don't think will be my realistic target. Yes, my realistic target. So if I have, for example, a structure like that, big impulsion in daily, big impulsion, a retracement forming a potentially higher low, and then we expect price to run the next high, which will be for me the realistic target on buy side. We have the same with on the sell side. So for this instance will be this target. This is what I call the realistic target. So I like to target the realistic target on daily, on the order flow daily, and the order flow weekly. All this stuff we are seeing right now, don't worry. We are going to apply this in the next video or in practice when we are going to start trading again at the beginning of the 2026. I believe in the second or the first week or the second week of January, we will restart trading for the new years. So The last one will be the patterns. The patterns I use simply the ascending and the descending wedge. The ascending wedge is a succession of higher high and higher low, squeezing price squeezing to the top. Price is squeezing to the top, and I prefer a reversal from a key zone. It can be, as I said, it can be supply, support or resistance, a demand zone, and imbalance zone. I need to see this reverse from this zone to take a trade and entry. I, I like to see these patterns. Take a trade somewhere here. And the descending wedge is just the opposite. Both are reversal patterns. I like to use the descending wedge for a bullish side and the ascending wedge for the bearish side. So my entry will be in lower time frame somewhere here. It depends if price decides sometime to retest in a lower price before continuing higher. So that's it for the patterns and tools I use. If you want me to go in details in each tools we touch today, feel free to leave a comment. Feel free to leave a comment, and maybe in the next video we touch in more details these these tools. But is just to set up the way I trade before starting 2026 with a good comprehension or good understanding of what I do technically and what I use in technically perspective. Maybe in the next video we are going to talk about some fundamentals analysis, the way I use fundamental analysis to combine with my technical analysis and get in some trade. Okay, that's it, the end of the video. These are pretty much all the tools I often use to mark up and analyze my chart in daily basis. This is the second video in a row I release on this channel. The first one was the introduction on what to expect watching on this channel in 2026. If you are interested on that, or if you are interested to watch it, I will leave a link below in the description to go check it. I also talk about me, my experience, where I come from, if you are interested, and what I plan to do in the next year. I stopped trading in half December because of the low volatility in the end of the year. I prefer to release right now this type of video to 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 spend the time before serious thing begin in 2026. The most interesting program will be back in January. As I said, we we are going to start with with weekly forecasts and break down some trade we hopefully we will take in January. So thank you for watching. I see you in the next one. It was Josue. I'm signing out.